support us on Patreon so you can be an afterburner so we could give you not financial advice just for your entertainment purposes only.
Yeah, we give bad financial advice out for free. The good stuff is in the afterburner.
I had YOLO. Welcome to the Escape News Podcast, and we appreciate you joining us today. We're going to be talking about money, and stock market crashes, things like that, and which we just had one. Well, actually, of this recording, we're recording ahead of time, as we've said before.
Yeah.
And so maybe there's just another market crash that just happened.
We're predicting one.
We're predicting
a correction.
I believe that there will be a massive correction sometime this year.
Massive correction.
If there isn't, well, that's kind of disappointing because I really wanted to buy cheap. Puts, calls, whatever.
Yeah.
And so I really think there'll be something this year. But in light of last year's, Ryan's going to present some information about many decades ago, well before I was... Well, I mean, are you going to talk about the 80s or just the Great Depression one?
The 80s.
You're going to talk about the 80s one?
Yeah,
okay.
we thought about doing the Great Depression one, but that one, there's not
a lot to say, I guess.
Yeah, I mean, I don't know.
It all fell out. Woohoo.
Yeah, kind of. The 80s one was a little more interesting, I thought. I mean, the Great Depression was pretty big. It had a long-lasting effect. I mean, that was pretty devastating. It's just that, like, the information on it, they kind of cover a kind of a cursory level of things about it, but then to get into the actual specifics, there's a lot of contention as to what actually caused. I guess economists love to argue about different aspects of it and all that. So it got kind of really confusing, a lot of rabbit trails. So the 80s was a little more concise. It was, honestly, to me, to sum it up, I mean, it was kind of short and sweet.
Short and sweet to the point is how we like our economic fallouts.
Yeah. I mean, there's some lingering, afterwards, but I mean, for the most part, it was fairly short. So, anyways, 1980s crash, Black Monday. I don't know. There's a lot of black this, black that, and I don't know.
Black Mondays, Black Fridays.
Yeah, I think it was Black Monday in this one. Anyway, so we're going back in time, 1987, October. So the actual crash happened October 19th, I believe it was. So we're kind of going back a couple more days. So it was like the 19th is a Monday. So we're going to go back to the previous Wednesday. So up until this point, for the last several weeks, months maybe, the markets were they were just growing. They're just kind of trending up or trending this way. It depends on what your culture is. What would you consider to be sloping up?
Which way is the way that you go up or down?
I think in India it's right to left is considered up, or we consider that down. I don't know. It's been a while. Anyways, for the past couple months leading up to this, there's a lot of really strong growth, and most people would consider that a good thing, but for a lot of investors, they kind of get spooked when things are growing aggressively and steadily, and they're just when's the other shoe drop? When's this correction going to happen? And so this was kind of building up in the minds of a lot of investors. And so in the investing world, a lot of investors are looking at other investors because they're wondering, what do they know that I don't? So they're kind of I'm going to react when they do, and it can cause a lot of problems. So we had all this growth coming up in the preceding months and weeks. And so, again, these investors are just waiting for something bad to happen, right? So they're just kind of on edge. Well, then the major investors, stakeholders in the market, they started saying, we're going to start selling. We're going to kind of reposition ourselves. We're going to try and divest a little bit. So they're trying to start to sell. Well, this kicks off other investors that are kind of in the know. They're like, well, if they're selling, maybe I should be selling. What do they know that I don't? So they start selling. And so on Wednesday and Thursday, there's this huge push, or they start they start doing the selling. Well, then the major investors looking at everyone else selling, so they're like, well, we got to sell, something's going on. So right, this back and forth, it's this feedback loop. You put a microphone next to a speaker and you get and it almost deafens you.
Nothing has wisdom more than people in a mob mentality. High emotions. Just very wise decisions being made.
There's a lot of money involved. It just keeps getting better. So by the time Friday rolls around, there's this selling spree. All the major people are moving things around. Well, because of technology, a lot of information didn't really move nearly as fast. So there's a ton of other investors that have no clue what's going on. because I think they were relying on ticker tape, or that maybe was a little before the 80s. Anyways, I mean, suffice it to say, like, there's a lot of selling going on, but not as nearly as much. But there's enough selling going on. So the markets close on Friday, and there's a lot of people who are now just getting wind of what's going on. They're like, oh no, here comes a crash. So a lot of brokerage firms apparently had this policy, right or wrong, where they would allow after-hours trades. So they would actually buy your shares over the weekend on the stipulation or with the condition that it's the market price that it closed at on a Friday. So if it closed at like $20 a share, they will buy it from you for $20 a share over the weekend, and then they lock in all these trade transactions on Monday morning.
That's not a bad deal if you know it's all going to fall out.
Right. Well, so where they messed up is they didn't put any thresholds on any of this stuff. So over the weekend, people are learning about the big sells that were going on the previous days, and so now they're just like mobbing their firm, these brokerage firms, and just selling everything. And the brokerage firms ran out of money; they ran out of all their cash reserves. But they were still legally on the hook to buy these things because they said they would. And so now they're having to buy these things. So they ran out of cash reserves, so now they're actually selling their positions. Like they're selling their own shares turn into cash that they can give these people in exchange for their shares over this weekend. So as you can imagine, like now it's been a pressure cooker, right? We've been cooking without the lid on for the past couple of days. Now we put a lid on it and sealed it. So now like the pressure's going through the roof. So when Monday hit and the markets opened, everything just blew to pieces. Like the entire thing crashed, and it was devastating. So I was talking to my parents about this. This wasn't like recently, but like this was years ago. Cause I was curious about like I think Black Monday. I was actually they got brought up, and because I think they had a market correction like when I was growing up, a very small one. But I was asking my parents about it. I was like, oh yeah, I remember 1987. Because my parents lived in New York at the time or just before. And so they still had friends there. They were talking to them about it when it all happened. They said there were people like throwing themselves out of windows because you realize, their entire lifestyle, their entire wealth, everything about them was wrapped up into stocks at the time, and they lost everything. They went from being like high rollers down to just homeless overnight kind of stuff. Or so they thought. I mean, they thought they saw their wealth just completely dissolve out from under them, and so they were throwing themselves out of windows. It's really bad.
Which is a common misconception. You don't lose anything until you sell.
Exactly.
Your house could be worth less in the public eye, but as long as you can make your mortgage payments and you don't sell the house, you haven't lost anything. Same thing with stocks. Yep. As long as the company didn't fold, if the economy goes down and you don't sell, you didn't lose anything.
Yep. Unrealized gains and unrealized losses.
Yes. So
they're unrealized because when you sell, that's when you lock in the loss or the gain. So keep that in mind. If you're young enough, stay committed.
Or if you're a seasoned day trader and you buy high and sell low, then you understand what we're talking about.
Yeah. So the entire thing, the whole house of cards fell on Monday. And that's at that point the Federal Reserve kicked in, right? So the Federal Reserve, they kind of came out of the Great Depression to basically address this very thing. So they kind of kicked into gear. So at this point, everyone's trying to sell. No one's buying. It's way too risky, so no one's buying. The problem with that is lenders will stop lending money because they're not going to keep risk on the books of someone's debt instruments. So they're going to want to get rid of these things as soon as they can. Sell them off to Fannie Mae, Freddie Mac. They try to sell these things off because they can't take the risk the U.S. government can. So they don't want to have this stuff. So they're not lending. Well, there's a lot of businesses that their day-to-day operations rely on lending. They need to get money to pay their people or to grow, and so everything kind of comes to a halt. So this is where we call the markets no longer liquid. So in order to maintain market liquidity, the Federal Reserve was like directly lending to people, or I should say lending to businesses. I don't know if they lend it to people, but I don't really know.
The government lending money is always a good thing.
Yeah, they're always borrowing too. So the Federal Reserve was lending money, and then they were also insuring or guaranteeing loans made by banks. So they're kind of a proxy kind of thing. So they're telling a bank, like, go ahead and make this or close this loan, and we will guarantee it. We'll take on that risk. And this was just to maintain market liquidity, right? So they don't want everything halting, because when the market seizes up, everything it goes really bad. So it's kind of like pulling the emergency brake in your car when you're going 60 miles an hour. you want to pump the brakes, not pull your emergency brake. So that's kind of what the Fed was trying to do. It's like ABS for the economy in this way. That's probably a terrible analogy. I'm not an economist or a high finance, or a mechanic. I'm not in high finance, so this might be a terrible analogy. Anyways, the Federal Reserve is like kind of kicking in to do this kind of thing. So oddly enough, I mean, by that Thursday, which I think was like the 22nd, by the 22nd, everything just kind of bounced back. Like they just it was like a 200 plus point game, which at the time was a big deal. Like now 200 points. I mean, if we
200 points, we do that like in 5, 10, 20 minutes.
Yeah.
Oh wow, oh no, it'll be back.
Yeah, we just a little bit of downturn, 300 points loss at the end of the day, but I mean it'll be back up tomorrow. No one bats an eye. But at the time, because I think the Dow Jones was at 1,200 or 1,400, wasn't very high. So 200 points is significant.
Man, if I had bought at that price, I'd be rich. Which I would be paradox because I wasn't born.
Yeah. So, it bounced back by that Thursday. I mean, they had a 200-point gain, I think, or something like that, around 200 points. It wasn't a full bounce back, right? I mean, the economy had not recovered back to what it was before the crash. But to have a massive jump like that was a huge positive signal to investors. And so that put them on the right trajectory, so that the markets then just slowly climbed up. It took about 1.5 to 2 years.
Support us on Patreon so you can be an afterburner, so we could give you not financial advice, just for your entertaining purposes only.
Yeah, we give bad financial advice out for free. But the good stuff is in the afterburner.
I know a lot of good financial advice that I don't necessarily do because we don't have tons of money in the market or anything like that. So it's I can't act on any of these things. Long time holder of whatever.
Yeah, penny stocks.
But I did read something regarding the Great Depression going years before, that the amount of time from if you had bought when stocks were there, or the Dow or whatever it was the highest at right before, and then the day after everything started going down, if you bought at that peak and you held through, I think it was only 6 or 10 years before you'd be back at the same thing. It's not, I mean, that's a long time. 6 to 10 years is a long section of life, but if you just hold and you didn't sell off, I think there were several other comparisons. If you bought it this time or sold it this time, if you just waited, it was worth it just waiting, because in the long run,
patience
is why I advocate for investing in America as a whole, investing in index funds and things like that rather than stock picking, because I don't you never know with individual companies and stuff, but if you bet on America as a whole and you do in index funds, you're going to see that America, as they say, stonks go up. You're betting on the trajectory of the country, and at the point at which this trajectory doesn't ever go up anymore, you have bigger problems and your money's probably worthless and the country doesn't exist. There's nothing you can do about it at that point, whether or not you invest in something else. Of course, unless you bought farmland and you were able to provide your own power and water, then you probably invest in something.
Gold and silver,
gold and silver. Everybody, I know quite a few people who buy that kind of stuff. It's oh yeah, okay, it makes sense. But going up to nowadays, did you finish up that one? I guess
there was nothing else to talk about. I mean, recovered on the trajectory for recovering, and that was it.
And now we're well above
30-some thousand.
Yeah, as of this recording.
There we
go. We're predicting a stock market crash. So then we want to talk about the coronavirus 2020 crash. So this has nothing to the actual virus. So I'm not going to put corona or COVID on the tag. So hopefully you find this without finding it that way, because YouTube likes to put all its little ticker information about that. This doesn't really have anything to do with the virus at all. More of just the economic stuff that happened around it. Mm-hmm. And so up to 2020, everything was cruising along. Everybody basically that I had talked to in finances and real estate was one of these days we're going to have economic fallout. There's going to be a cycle. The cycle refreshes every 8 to 12 years. Yeah. And we're well past that point. 2008 was a long time ago since the last time. And we're at the point we need to, this thing's going down and then we'll start over and we'll start going back up again.
Yep.
And nobody expected that it would be COVID that would do that. But I was even talking to a friend this morning about this, that he was oh, well, do you think that the COVID crash of 2020 is that refresh? And I don't think so. I don't think that's, because it's unique. Yes, the economy went down, but you have all the other factors at play where people are, I know in general, there are a lot of people out there who are much better educated because of the internet and different things in finances and stuff, and not over leveraging themselves. But at the same time, we're almost doing the same stuff in 2008. nowadays that cause some of the problems with houses is that we're giving money to people who shouldn't have it, because basically the gist of it is that banks need to lend money to make money. And when you lend so much money out so people can buy houses, eventually you run out of people to lend money to buy houses, so you lower your standards, and you keep doing that long enough. Eventually you're giving people money who don't have any money to buy a house. Like, I know several people who, hey, we don't have any money. Oh, well, the bank will give you money to buy this house. And we're kind of at that case just before COVID. I remember that happening. But then COVID happened. I don't know exactly what happened with lending. I know interest rates went down, and you have some problems there. Again, we're not economists. This is not like financial advice.
But I did refinance.
Yeah, exactly.
During the COVID thing, it was like, this is too good to pass up.
Yep. So
it was worth the closing costs.
If you've been good with your money and stuff, like, it's good to do some of those things. You can take advantage of those times. So interesting things to know about. If you don't know about the virus, where have you been? Like, we've been all waiting here for you to show up to the party and like see how bad 2020 was, and then 2021 starts, and now we know that years can still be worse than 2020. Anyways, side point there. As far as what happened, we have lockdowns, we have the virus, we have projections that, hey, everything's about to get really bad in the economy, and the end of February is roughly when the stocks, I have two that I'm going to compare here that are index or not index funds necessarily in the way that I look at them, but they have the S&P 500, that's 500 of the companies, and the Dow Jones Industrial, and that's like, I think the top 100 or something like that in their average. And the end of February, the SPY, S&P, is $335 roughly. Dow Jones was at $290. March 20th, somewhere in that range, or 13th through the 27th, some of that range is the lowest points. The SPY hit about $242, and the Dow hit $203. So that was $90 off the Dow, and the SPY, I don't have this all written in percentages. I don't have their points either. I know everybody else talks about points, but when it comes to points, I don't know what that means. Like, 30,000 points? Sure, we'll give you free, like, 500 horse money. Like, you're just making up stuff right now. Like, I don't understand what that means. But when you talk about real world numbers, US dollars, SPY was at $335, and it dropped down to $242. So that's almost $100 off, or somewhere in that range. That's a considerable drop. It only took until August for the S&P 500 to get back to 335, and the Dow September roughly. So it only took a few months it took like 1 month to just boom tank, and then it took only a few months for it to recover. And people felt like, I guess, the economic recovery was taking longer. And the reason for that is, so now we're at like 378 on the S&P and 308 on the Dow. So we're already up past those numbers that we were pre-COVID. But the reason why people still feel like the economy is hurting is because these numbers don't represent the actual what's going on in the economy. Because you did have a lot of small businesses close, you had a lot of consolidation, you had a lot of debt and various other things. And the reflection here is that the big tech companies, Tesla, which is like, as of this recording, it was like almost $900. I was like, whoa, man, like this thing, every time. Wall Street bets, man, they have some nerve. I don't know what in the world. They're crazy. But I don't know if it's just them, but Tesla is like going up through the roof. Yep. And you have Tesla, Amazon, Apple. Amazon, of course, benefited greatly during the pandemic because everybody was wanting to order stuff. And so anything that could go online or was already there did really well. And so what you have in the S&P and Dow and various other indexes is that the market looks like it's up because those companies are doing really well. And it's really only, from what I've been reading, the S&P 500, it's the top 10 companies, or the top 10% roughly in the market, that are doing really well and reflecting this in these indexes and saying, hey, everything's great, but realistically it isn't. Most of those other companies, when you look at the top 10 or the top 10% of the companies, they're leading the index, and the gap between them and the rest of the other companies, most of those other companies haven't recovered since the COVID incident. They haven't recovered to like what they were before that, which is a really interesting thing to know, I think. Obviously, things will probably change over by the time this recording comes out, whether or not it's a crash or things actually recover and things continue to shift. But I thought that was really interesting to note. Not everything you read as far as like points on the S&P or the Dow reflect actually what's happening. Yeah. So that's probably why you feel, a lot of people feel like discordance between like what they see in the market, like when, not to like totally get political or stuff, when the whole Washington D.C. Capitol stuff happened on Wednesday.
Yeah.
And I'm dating when we're recording this, but on Wednesday when that happened, then you also saw the market like didn't really miss a beat. It like dropped for an hour, but like only a few dollars on stuff, and then it was just like, man, we're just gonna keep going up, and it hit its highest records. I think that day it just kept going up. It's just going up.
Yeah.
Bitcoin, other things in the market, just like well, money just doesn't really care.
Yeah. Well, I mean, so media kind of makes mountains out of molehills a lot of times,
Yeah.
depending on what they're trying to foment. A media circus, right? Draws eyeballs to their pages or whatever they're trying to do. So like they'll make things out to be like way bigger than what they actually are. But investors, they kind of ignore a lot of that. Like serious investors, the ones that like manage hedge funds and different things like that, they're looking at like, well, I don't really care about that. I want to find out like, did they actually do X, Y, and Z? No, they didn't. Okay. Well, I'm not going to be moving anything in my portfolio anytime soon until there's something like actionable, to work with here. Or they have to run through things through computer models, so they're not going to really make a decision for another week. I don't know, Yeah. But they're not necessarily focused on the same thing that the populace is focused on and what they believe to be a serious thing. So,
which when you use that word populace, that also reflects something we had talked about socialism at one point. Mm-hmm. And one of the points that they brought up constantly in their argument about why capitalism is bad is because like the rich get richer and the poor get poorer. And some people will point to that in the stock market, that the stock market and investors and stuff are just don't care what goes on in the general populace level because mm-hmm. they have so much wealth and whatever, they can just keep doing their thing and rolling and make money.
Yeah, they'll ride it out.
Yeah, and that may be true to some degree. I don't necessarily agree with like that socialism is better than capitalism and because of a point like that, but it's just an interesting thing to note there that there does seem to be I wouldn't even say dichotomy because there's a lot more factions than just two.
Yeah.
But when it comes to investing in money and things like that, it is really interesting to see that what affects the stock market, both in the 80s, in the Great Depression, coronavirus, and whether or not we're going to hit another recycle of the market.
Yeah. Well, so they're not entirely sure, as far as I know, they're not entirely sure like what kicks off the starts of these corrections, because sometimes whatever event happens, the correction isn't seen until much later. So it's really hard to kind of trace it back. And so who knows with this coronavirus correction or whatever it is that going to accelerate the actual correction or is it going to push it off like further? We just don't know.
Time will tell, I guess.
Yeah.
Well, hey, hope you enjoyed this episode. Like, comment, subscribe, support us on Patreon. You can go check out the Afterburner over there. It's now up. And, of course, we appreciate your support and be active in our community.
Please.
Yeah. And we want to hear from you. So,
yeah.
And share with your friends. That would greatly help us out. And, of course, in our podcast, activity reviews, we always ask for that. But we're not asking just for ourselves, but so you can share all these fun things that we talk about with your friends. And bring them into the conversation.
Yeah, or let us know what you want us to discuss or talk about or research. It's like we're kind of coming up with things ourselves
mm-hmm.
that kind of interest us. But we would mind like extra input. So like leave a comment, let us know what you are interested in, and maybe we'll choose that as a topic.
Yeah, like a hit and run. Like the Earth is really flat, and then just like. Make sure you subscribe on your way out the door.
The Earth is a banana or a donut.
Yeah, or a donut. Yeah. All right, we'll see you guys next time.
See ya.